All right, I wanted to do a quick TA video on Clover Health. I haven't done one in a while, so it's Easter. Happy Easter. Hope everything's going well for you today. It's going to be a combination between some, TA. I have a lot going on here with cycle analysis, money flow, volume, uh, indicators that specify when there's high opportunity, other indicators that specify like there's a lot of activity going on. Um, Others are predicting, um, and others are just telling you structure and where potential points are that could be relevant as far as buying and selling and whatnot. Um, I'm not going to go too far into the weekly because it's just it hasn't had enough time to like really soak it all in yet. The daily kind of does, but I'm just going to point a few things out on the weekly that I've seen here. It's like more of a pattern structure um, on the cycle analysis here. No, this is definitely going to be a positive. Structure is positive. You can see in here. We had a divergence between here and here with the money flow. It's negative, right? Um, you can see it probably better if I do it like that. It hit that threshold here and it hit the threshold there, but it did not, and it created a lower low. So that's in itself is a divergence. You can see by the blue line here and here. It's telling you there's a divergence going on here with the money flow, right? With the hyperwave. You can adjust these indicators as you see fit. That's what I like about them. So you could diversify. The indicator settings. So it's not like just one stick plan scenario. It's as you customize, as you see fit, discretionary. Um, you know, what do you call it? Like use your better judgment scenario, right? So that's awesome in my book. But there is a pattern on the weekly that I want to point out, other than this one right here. And if you notice, this is the primary weekly trough, right, from beginning to end on the cycle analysis. It doesn't specify if it's going to be up or down, right or left until it happens, right? So definitely from here to there is a right-handed translation, which means higher highs, higher lows. You could say if it was from here down to there, if I was to draw a line from here, from this one to this one down, and that would be a left-handed translation, which means the high came in the beginning of it, then it faded it down to the end of the trough, right? But we have a divergence on price action here and the MACD there. Um, we had one here on the upward. Now we have one on the downward. So there's a divergence going on here. That's definitely that low that came in at 280. I did say a while back that 280 could be a low point if the market did tend to crash or go down significantly, have any type of really strongish selling pressure. I did say that was an opportunity. I did not see it getting there, but it's definitely on my radar. If that was the case, if we did have a strong momentum, you can see here in this um, with the cash flow, the negative, how it created this inner bubble inside of its bubble. That's exhaustion. That means there was a lot of selling pressure going on here. Typically, when you have that right there, that means there could be a retracement or a bottom scenario happening. Now, let's go back to the weekly here. If you notice that the minor cycle within the dominant cycle typically has the first cycle, it's a downward movement, then it finds a bottom. Then the second cycle, the first half is down, the second half is up, right? Just like here, the first half is pretty much down or nothing. You can call it, nothing, but I'm looking at more of a down, right? Because the MACD, is also heading downward. But then you get to about the center of it, then it goes up. So the next trough within, the minor trough within the primary trough is an up cycle. This then the first cycle, like right here, right, it's going to be a downward cycle, right? You can see it on the MACD, it's downward. So using that pattern, right, it would suggest that this next one should be an upward cycle, and it doesn't have to be significant. It just has to state that this is going to be the bottom, right? You can see the MACD on the weekly is rolling over. The CDV is positive on the weekly. If you pull it all the way back, it hit extremes over here around almost zero point 0.4 negative, right? And its positive has ever been at, you could probably say, is during the gamma squeeze, but it's still in a positive structure now, right? So that's a good thing. Um, Another thing, typically the market structure indicator right here uh, moves up prior to the indicator flopping from positive to negative, because I have this indicator set up to be delayed, to be more suggesting that we are in an upward trend now. This indicator also is pretty much the same way, this green line right here. But this was a significant bottoming area, I believe, and I would think that we might be able to touch it one more time, or within this area right here from somewhere at 340 to $3, come down one last dip before we rip through the remainder of the cycle, especially with earnings coming up, stuff like that. And the other indicators are suggesting it as well. Now, if we look at the daily, right, within that, I'm seeing a head and shoulders pattern starting to form, and I would expect it. There's a coiling up going on right here with the with the hyperwave. Of course, all these indicators or settings are discretionary, so you're going to have to use your better judgment on them. But if you see something here, right, another pattern, right, see how we get these strong buy zones, that these green circles to indicate that. That's a lot of potential going on there. There's a lot of participants, right? Typically, after we get that, there's a little bit of a retracement, and then boom, right? More or less, it's an upward direction after that. It doesn't go lower than the previous, dots where there was some interest going on there. You can see it here too. It got to that level, then it never seen it again. So here it got to that level once, never seen it again. Here it got to that level, never seen it again. Here, where we're at with this head and shoulders pattern at, we got the 280. We got 1, 2, 3 dots here, 3 indications going on here, and we probably see it one time within this area and never see it again. If the pattern holds up, now the market structure is saying, and the MACD is saying, that we should start to see some type of retracement going on, but some back testing going on. I expect that with the head and shoulders pattern, because this would be the shoulder, head, and then shoulder. The 200-day simple moving average is right there, and it bounced off the 200-day simple moving average right here where the divergence was created on the MACD, right? Within this center minor trough zone on the weekly, right? So also on the money flow profile, you can see there's a lot of interest going on here, which means if there's potential buying, it's going to be below that interest area. The potential selling is going to be above that interest area. So the interest, which would be the point of control, which would be right here at around $3.60, point of control price. So using that in itself, that means the discount zone would be below and above it, or the supply in the discount zone. So that's around $3.40, right? Because that's below the point of control. It's still a positive point of control because it's green. You would see a negative point of control referenced here, like within this red one that you see right here at $8 on the weekly. So it's still positive. Nevertheless, it's just, it has to work itself out. Now, when you use something like order flow, when you're using, like a book map, or you're using the order book, I also have areas of interest for supply and demand that I integrated into my technical analysis. Now, those things do change, but they give you, in my opinion, they're going to give me better insight to what's going on, of course, right? So around this $5 range, which we've seen it hit like here, 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 and then definitely here, right? Um, that's almost like a curl, right? And that's what's going on here. But there's more at work. So yeah, the $5 range is going to be a bitch to break through automatically. But I think the $2.80 to $3 range is also going to be a bitch to break through on the downside. So I wouldn't, you know, I wouldn't be surprised if we see something like this going on for a while before we get a breakout, right? I wouldn't be surprised. But we are currently in a downward trend on the daily. We're in an upward trend on the weekly. All right. So we are in the market structure on the weekly and towards the downside. We should start seeing a break up. I would think we would get one more, um, dip down right here where this market structure comes down here, that bounces and then goes back up. I would think something like that could happen. The algo indicator for for future price movement suggests right here. Let's see, get tied in with the CVD because it does very well with CVD. It suggests we're going to have one little bump up, then we should retest down, which right here within this time frame is what I'm thinking. The the other shoulder is going to be built, and then we're going to pop up. I don't think this is really going to happen on this side, but we will see. I like to keep it short and sweet with using this indicator, not looking too far ahead. So I'm thinking that this is going to be a little bit of a pop up, then a pop down, some consolidation sideways, maybe around three, probably lower than where it shows here. Probably around 200-day simple moving average on the daily, around 330, give or take 10 cents. We could possibly see anywhere to like 320 to $3 if the market is going down, significantly. And we're building that shoulder, so it'll be a slanted shoulder, not so much the way it's designed here. That's a textbook one, but it would be something like this, right? So it would be more of a slanted one following this direction that it's having, right? And then the neckline would be right here, somewhere like, oops, pretty much where the trend breaks, right? So you could call like that right there the neckline. So once it does shoulder, head, and then a deep retracement shoulder, but not deeper than the head, because then it will destroy that thesis. Can't go any lower. I mean, it's a shoulder, right? So it could maintain it from like here to there, right? Continue that shoulder. There's the neckline. It breaks, and then we break through this resistance zone right here and see some consolidation and maybe break through the ultimate resistance, which is at $5. Um, but yeah, something like that. I'll save that the way it is. So not only I have this pattern going on here with this divergence, right? And these indicators here suggest good buying opportunities for when it's oversold or you have a lot of selling pressure, which this indicator, it described it with an overflow little dot round bubble right here, right? So this would have been an excellent time to add to position somewhere here. I had a order set for $3. I didn't think it would go down anything lower, so I got it filled, and I used my covered call cash flow that I make on the side while it's moving sideways like this to buy more shares. So I had the money that I made off my covered call set up to purchase shares at $3 if it was to hit that, and it did hit it and it went down 280. I could have got it for lower. I wasn't standing in front of my computer, so I got a job. I'm a W-2 employee, so I don't have time to just, you know, constantly monitor it. But yeah, here, and we can take a look at how cool this indicator is on the daily, right? Um, See how this was a extremely oversold zone when it had this selling pressure coming in. Then you had this indicator go off, right? So if you look at it on the daily here, and you're like, well, back then, man, we ain't never going to break a dollar. We ain't never going to break a dollar. This thing's going to just keep on working its way down slowly but surely, right? But you were like, you know what? There's an extreme oversold scenario going on here, right? I see a divergence building. I didn't have some of these indicators at the time, so I couldn't see it like the way I'm seeing it now, right? And then you see these buying opportunities going on here. This severely, you know, undervalued scenario with the intrinsic value calculation. On top of that, your indicators to suggest buying opportunities. That's what this one does. This blue and this red. When you get them both side by side like that, it's very important. But when you get a divergence, how it had it here, and an oversold zone, um, where there was a lot of sellers coming in. So this was definitely this indication. For if you're holding long, this is what you want to see when you buy, because you want to have the benefit of the doubt that you're getting in at a good price, right? And that's what these things do. They offer you at this point in time. Well, at this point in time, when things were cheap. So that's basically what it's saying. Then you do your fundamental analysis, and it's cheap anyways, right? So then you put the two together, and then you come up with the buying opportunity plan. Do what you got to do. But yeah, so it had it here and here. There was an extreme one here. So you could have said I bought anything under $1, right? And that's where you would have been at with that. This, this, this. So it went off here at this zone. It went off here at this zone. This green ones are short-term money coming in, right? So these are like swing traders or something, but these are more like developed for institutional ownership. These blue and the red ones. But here, that's like swing traders. So you have one here, that's here. And you have another one here. Unfortunately, there wasn't a red one to go along with it. That would have been a little bit more stronger. Red and blue simultaneously happen at the same time. That indicates a really strong area, but still, nevertheless, blue. It's going up. That's a buying opportunity. So you can see it here, had it. Swing traders got in there right when that candle popped. Um, they got in here and here. Institutions got in there. This is definitely a wide institutional band here. You got these signals going off over here, which is like my confluence indicator. There, and there. And you noticed, I don't know if I said it, but it did go back once before it popped and never went any lower. So right here, it went down once before it popped and never not any lower than that price. So it went down here to 280. Could see it come back down, but the second shoulder pop, um, and never go any lower, right? So that's why I'm thinking $3 is probably going to be the lowest. Um. So yeah, for the long term on the weekly, that's not really long term. You're talking about if you're a decade, so that's your long term. But we're going to say the weekly chart is considered to be long term. That $5 resistance zone is going to be very important, and every dollar zone after that is. And I think the most significant one is going to be that $10 zone. So the 5, the 10, and the 15 are the significant ones. Everyone in between is kind of like an area where price should stall, reform a short-term bottom before it moves to its next its next rally. As long as we stay above the 200-day simple moving average, we're in an uptrend, and we are on it. We are above it on the daily. So this zone right here is definitely consolidation. That's what I have to think. That's what I think about it. You know, if you have any questions on some of this stuff here, you can shoot me a message on the video. Um, these zones, sometimes they line up. Sometimes these daily troughs, they line up with the weekly minor trough. I think this one does. And when they line up like that, that's a good sign. Like right here, you see how the weekly one right here lines up pretty much with the daily one. But if you go to the next one right here, it doesn't line up. So when you get troughs lining up together, that's a very important area. Now, when they all three line up together, holy shit, that should be a really important area. Let's see if they ever done it. Here. No. Here. I want to say this one did. Nope. Yeah. This one did right here. So that price was at anywhere from $3.40 to the high of $3. No, $3.04 to the high of $3.40, which is this block, this order block right here. So, that's very significant. That's where the discount comes in at. We need to see this 200-day simple moving average start moving up though on the weekly. So does any other troughs line up with it? There, this one does. So yeah, this one's going to be a very important one. It's going to be on September, the end of the year of this year. That one, nope, and that one was not. So September is going to be a very important trough because you got all three. You got the daily, the minor, of course, lining up with the weekly. So right here, Tuesday the 2nd, September 2025. If we continue to go sideways, that could possibly be a bottom, for the next leg up. If you're looking at this from a longer term perspective, then this would be the change of character right here. We could say that this was the change, right? And this was one right here to that top. That was one. This is two. If it doesn't do it anytime soon, somewhere here, right? That. And if you're familiar with this ABC or 1, 2, 3, 4, 5 pattern, the biggest ones are the 3s and the 5s, typically are. So this is 1, this is 2. Then the third one is going to be one of the biggest ones. So I would think that it would reach 10, right? And then that'll be 1, 2, 3, then 4 somewhere. This is all hypothetical, but it's Elliott wave. So you could say at what, $5, 4, and then hell, not even that low, honestly. We'll say $6. And then, 5 would be like maybe somewhere above 15. That would be 5 right there. So that's what I'm thinking, something like that. So that's 1, 2, 3, 4, and then 5, and then ABC, whatever, consolidating and going back up. As of now, $20 would be the fifth at the end of the fifth wave, probably. If not, if it gets that super power charge, right, it might be able to make it to like $50. If the fifth wave is larger than the third wave, right? So, anyways, I think we're in the second wave. It's coming to a conclusion. We should start seeing the third wave being built or start actually happening. And I don't think I have anything else. Yeah, that's about the gist of it. So I guess Clover Health to the moon, baby. We got to break that $5. Otherwise, we're just going to continue consolidating. We continue making profit on those covered calls up until we hit around 8 to 10 ish. I want to speculate and say 10 will probably be better than 8, but 8 would probably be a good one. Then consolidate, have that fourth wave to consolidation, and then break through 10, break through 15 on the fifth wave up. All right, y'all have a nice day. Out.